America, the country with the most entrepreneurs, home to companies like Apple, Google, Microsoft, Facebook, Amazon, and Tesla, successful companies that have brought amazing innovation to the modern world. The American Tamil Entrepreneur Association, or ATEA, is home to those Tamil professionals who have left their homes behind and migrated here and found success as entrepreneurs and leaders in technology. Founded in the year 2016 by experienced entrepreneurs from San Francisco and New York, ATEA transcends national boundaries to bring together Tamil professionals from all over the world. ATEA has been conducting workshops and seminars that have informed and advised entrepreneurs in various fields about early investment, emerging technologies, technical know-how, and mentoring. ATEA has many programs that assist entrepreneurs in every stage of their journey. Entrepreneurs can leverage ATEA's deep ecosystem of CXOs, SMEs, VCs, academics, and corporate executives. Another major initiative by the American Tamil Entrepreneur Association is the Digital Accelerator program. Digital Accelerator helps entrepreneurs connect with venture capitalists and seasoned professionals who offer expert technical advice. You could even qualify for a startup grant offered by the government of Tamil Nadu. Join us as we come together as proud Tamilians from all over the world and march together towards a common goal. If you are a Tamil entrepreneur anywhere in the world, contact the American Tamil Entrepreneur Association by email at contact@ateausa.org or visit us at www.ateausa.org.
What a great video.
I agree, Priya. Okay, we're moving on to our second panel for the day, which is going to be the VC panel. We have some very accomplished women on our panel for this, who've not only shattered glass ceilings for themselves, but they are actually now opening doors for other women. To talk to these panelists, our moderator for today is Chandini Amineni. Chandini is formerly a partner at 500 Startups, a global VC firm with 2,500 investments. Chandini has worked hands-on with over 300 early-stage startups, helping them accelerate their growth. Her extensive experience with startups operating in every corner of the globe, whether it's web or mobile, B2B or B2C, helps her understand the unique challenges in different ecosystems and the common mistakes every early stage founder makes when trying to grow their startup. She is also the author of Growth 101 for early stage startups, a growth diagnostics manual to help founders assess the right growth strategy for their startup. Before joining 500, Chandani co-founded Activity Hero, a local marketplace startup. Prior to that, she built robots, sustainable solutions for saving the bees, invented a sensor for high-speed paper sorting, and acquired 4 patents on diesel engines. Chandani, take it away.
Chandani, you're on mute.
That is like the catchphrase of 2020. Thank you so much. Thanks a lot for the introduction, Priya. And as Priya mentioned, I have been both a founder and also a VC. So I have literally been on both sides of this specific table we're at today. So without any further delay, it's my pleasure to introduce to you our esteemed panelists. I will start with Gayatri Radhakrishnan, who's the Director of VC at Micron. Gayatri, can you tell us a bit about yourself and your AI fund?
Sure. Thank you, Chandani, and thank you, ATEA, for giving me the opportunity to be a part of this panel today. I've been with Micron Ventures for a little over a year now. We launched a $100 million AI fund in the fall of 2018, and we've been very active. We actively invest with startups that are applying AI on certain verticals. They are automotive, manufacturing, healthcare, and agriculture. And then we're also investing in core AI technologies. So things like AI accelerators and such. We've already made 12 investments to date. Our first investment was in March. So we've been very active. And we tend to follow. And we are very eager to talk to entrepreneurs who are leveraging AI to change the world we live in. Thank you.
Thank you so much, Gayatri. Moving on to Aarti Chandana, who is the partner at SV2 Fund. Aarti, can you tell us a bit about yourself and about impact investing? And you are on mute.
I guess I'm muted. I'm Aarti Chandana, and I am on the board and also a partner at Silicon Valley Social Venture Fund, where I lead impact investing. But other than that, I do a bunch of angel investing, which is impact and non-impact in the sense, if you want to say it that way. But I also do a lot of impact investing through our family foundation. My background is tech. I have a degree in computer science and worked in the tech industry for several years. And in the last 4 years, I primarily spend my time investing and mentoring. I work with several accelerator programs and mentor all kinds of impact entrepreneurs who really keep me alive. Thanks.
Thank you so much, Aarti. Moving on to Susan, who's a VC at Aligned Partners. Susan, can you tell us a bit about yourself and also about Aligned Partners?
Sure, thank you. And I'm just so happy to be on this panel with such distinguished women. It's just wonderful to see the speakers this morning and the whole agenda today. It warms the heart. So let's see, I've been in venture now for about 22 years. Prior to that, I started my career with a double ECS, designing microprocessor chips, and then ran operations and marketing and sales in several large corporations, and then had my own company for 7 years prior to coming into venture capital. I co-founded Aligned Partners with another female GP that I had known many years. And we began Aligned Partners in 2011. So we're investing out of our third fund. And our focus is on startups that are serving enterprise customers. We invest at the early stage, and we look for companies that can be very capital efficient. And we define capital efficient as companies that will reach profitability with 15 million or less in total equity. Oftentimes our companies are much less than that, anywhere from 3 to 5 million when they reach profitability. We oftentimes see our companies get acquired by corporates anywhere from 100 to 300 million, and occasionally we have an outlier that will go public. So we focus on companies and entrepreneurs that really care a lot about the customers and spend a lot of time understanding the customers and get the validation points and initial revenue, at which point we will come in to assist in scaling out the company. That's us.
Great, thank you so much. And focus on customers sounds somewhat interesting. And last but not least, we have Priya Rajan, who is the Managing Director at Silicon Valley Bank. Priya, can you tell us about yourself and how SVB works with founders?
Awesome. Thank you, Chandani. Thanks again, ATA, for this opportunity to come speak to you guys. I sit at a different vantage point from all of the other amazing speakers that are here today. For the folks who don't know SVB, we're a commercial bank, but we work with 50% or more of the venture-backed companies around the world, actually, and also the funds themselves. So we get to see not just the founders who gets funded, but also the funds who funds them. And we've been around for more than 40 years. So we have seen the trend kind of go up and down, and we're kind of going through a next phase of a pivot is what we're thinking. We work across the innovation ecosystem, across all of that, very focused on the technology markets. And my role specifically is I oversee the India and the MENA market for the bank. That just means working with the funds and founders coming from the region, expanding into the US and the global footprint. So, I'm very passionate about, getting more female leaders to the stage and kind of pulling each other up. And, I work very closely with Women Who Code, NA3, which is another South Asian organization as well. So happy to help any which way to foster entrepreneurship, especially from Chennai, where I'm from.
We have as you see, we have an amazing set of panelists. Let's jump right on to, so the audience, just to give the panelists a little bit of a background, are both early stage founders and people in the corporate looking to move over both either to entrepreneurship or venture capital. So I have some questions from that perspective. So as a VC, what is it that you look for in a team or a startup that you're looking to invest in? And these questions are in general for everyone. So just feel free to mute yourself if you feel like you want to be the first person to answer. It's not to anyone in specific.
Sure, I'll jump in. So what I look for in an entrepreneurial team, I think there are a number of key elements, one of which is synergistic skill sets amongst the team members. And I think one thing that founders need to remember is that when you have a founding team, it really is a marriage, and divorces are very expensive, both financially as well as emotionally. And so be very careful about who you partner with and who is in the founding team. And certainly choose founders that have synergistic capabilities and respect for each other's skill sets. Where I see things break down amongst the founders of the founding team is where there isn't that. There's a lack of respect. We also look for flexibility. Resilience, particularly when no one can plan for COVID, and so you have to be able to react in real time to the data that's coming in and make the right kind of decisions. And we also look for empathy. Empathy with not only your employees but with your customers. Customers are number one. Without really a customer, you don't have a company. And so that's just kind of the initial target list that we're looking for.
I can go next. So, just to add to what Susan said, when I look at entrepreneurs, I first want to see if they have the DNA of an entrepreneur. Not everyone who thinks they can be an entrepreneur can be one. It is a very difficult journey. It's also a very lonely journey, and the people that they see most are just their close team that they have, which there really has to be synergy, and they have to enjoy creating things from scratch. They have very little or no money. They have to be able to motivate each other and around, people around them. I feel they have to be a super salesperson, just sell themselves. If they don't believe in themselves and they're not highly passionate about what they're doing, it is very difficult to convince others that what they're doing is right. I also feel they should be solving either a real problem, or they're making a change, or there's a need. There's something in there that's really needed when they start what they're doing. They have to keep their stakeholders in mind if they are raising funds. They have to be very persuasive and absolutely not afraid of failure. Very open-minded. I also feel that sometimes if they are not good listeners, they don't do well, because they do need to listen to each other on the team and listen to others. And this is just like Susan said, it's a long-term marriage. A divorce is very, very expensive, and they're most often using the same lawyers. You don't want to spend money on a bunch of lawyers to make things happen. And I have unfortunately had to work with. I just was working with a mentor yesterday who's having an issue. Who's having this? It's a little strange. He called me because I'm South Asian. So he's Caucasian. He's LGBTQ. His co-founder is South Indian, and he finds him very abrasive, and we had this long cultural discussion around that. But anyway, that's my take. Yes. So thanks.
And I don't know, maybe Chandani, if I could do just a plus
Yes,
one
please.
to what both Susan and Aarti said.
Yes.
On the teams, one of the things that we work with the founders, or aspiring founders want to start a company, or the early stage founders, is they kind of question themselves at if should I add a co-founder? I'm going to dilute my equity. So the founder journey is a very hard journey, and it's a very lonely journey. So my strong suggestion is to make sure you have a team. Obviously you need to make sure the team is synergistic and make sure that you're kind of adding to each other's skill set. But single founder journey is much more difficult. So I think strongly consider to add a co-founder early on if possible. And these are the ones that come right after your school, or when you're in your corporate life working a team together and you're working on the same problem. That's when the idea comes together. So if you kind of work through those and you've been through those experiences together, it makes your founder journey together much easier. I wanted to add that as well.
Thank you. Gayatri, not sure if you were here when the question was asked, but I'd asked, what do you look for in a team or startup you're looking to invest in?
So I'm typically looking for can you guys hear me okay?
Yes, yeah.
I hope you can hear me. Okay, thank you. So I'm typically looking for a very strong team. First and foremost, I want to say I'm looking for a founder who is, the word I like to use is coachable, who's active listener, who's open to listening to feedback. I've seen some founders who are very passionate about their idea and very stuck on what they're doing, and that's not necessarily the best thing, because what ends up happening is they're not open to feedback and receptive to ideas. And as VCs, we've seen sort of the startup journey in multiple lenses, and we can share those lessons that we've learned from other founders and such, that if the founder is not receptive or coachable, then it becomes you've invested money in the company, but then you're not able to guide or assist the founder. So I look for openness and a founder who's willing to listen. I don't need them to always implement every suggestion, but someone who's receptive to the
It looks like Gayatri has a bit of connectivity issues, but we did hear most of what you said, Gayatri. So thank you for that. I'm going to ask the panelists to dig a little deeper into that, because some of the things you said are, a little amorphous, or like qualitative measures like resilience, empathy, DNA of entrepreneur, strong team. And for somebody who doesn't know the process of fundraising, it almost feels like a job interview. You go there, you speak to the VC, you pitch for an hour. How do you, as a VC, as an investor, how do you decipher all of this? What are the signals you're looking for? So, and related to that, what are a couple of tactical or actionable lessons for entrepreneurs that you can share that they can use to exhibit any of these characteristics you're looking for in the meetings? What does the process look like? How long does it take for you to evaluate all of this? How do you evaluate all of this? And how can a founder set themselves up for success? I understand it's a huge question, but you can take pieces of it.
Maybe I can. I was just going to say. I was just going to say, I coach and mentor significant number of companies, and I see the one, don't go to a consumer investor and pitch to an enterprise product. Know who you're pitching to, know exactly who their portfolio companies are, kind of learn about them, go not just that, and try to I'm not saying stalk on social media, but get to know them, get to know what their personal preferences are, just so that you can say that, hey, I did work about you. And also on top of it, obviously on your side as well, make sure you're ready. I think readiness is a key to who you're pitching to. If it's an angel, if it's a family office, if you're friends and family, each of those pitches have to be different, because each of them are looking for a different reason why they are looking to invest in. So I always have the founders put the investor hat on to say, would you put your money if that person is pitching to you? So it sounds simple, but it's pretty difficult to kind of put that to action. But the most important thing is be prepared.
Susan, do you want to go next?
Okay, I'll step up. I think one of the things you have to understand is how much deal flow funds have. Every year for our LP meeting, we actually track the number of deals coming in that fit our criteria. We had about 4,200 deals come in the last 18 months, actually. Out of those, we engaged with about 386, and out of that, we did 3 investments. So that gives you a feel for kind of the filter that's coming down. And so I think as an entrepreneur, you need to figure out who is the best partner for you, your best investing partner. They may have invested in particular companies that have a business model or a scale out model that you think you will be following. If they have made money in that sector before, they'll be great partners for you because they'll understand the nuances of how to build a company in that segment and how to assist you in building out that. I think in the meeting itself, obviously what we're looking for, and actually in the engagement, because it's not just one single meeting, given that you come through the first hurdle, is we're looking for a real understanding and a gut level understanding of the customers and the problem that you're trying to solve, the importance level of that with the customers, and how much interaction time you've had them. Our best entrepreneurs are those who come directly out of the domain category with an intrinsic personal understanding of the pain that you're trying to solve, and have spent a lot of time with customers to try and understand how important it is to customers, what that total solution set should look like, how the customers are thinking about the purchase. So that's really the biggest criteria for us from that standpoint, because everything else can flow from that. But if you don't have a customer in a segment that's clearly identified with a solution, you really don't have a company.
Okay, I'll go next. So I'm going to start actually right from the start. When an entrepreneur tries to make a connection with a VC, what they're sending at that point in time really is their deck. And what I tell entrepreneurs is your deck is like your resume. If you're sending your resume to a recruiter, they're going to put it in a yes pile or a no pile. And if that deck does not catch the eye in 2 minutes of a VC, they're going to put it in the no pile. So you're gone right there. So make sure that that's good. If you're doing a phone call, make sure you have a very crisp elevator pitch so that you catch their attention. Readiness is key. Just if they're not prepared, do not take that meeting. Just postpone it. We've seen lots of entrepreneurs who come very, very unprepared, and I don't know why they do this, but they do. Again, understanding the customer, is this something that is necessary, or are you doing this just because you feel it's cool? Make sure that it's something that's absolutely needed. Check out your competition. If a lot of people are doing this and it exists, unless there is something that really differentiates you, don't waste your time. Okay, it needs to be in this world. If you're pitching here in the Silicon Valley, it needs to be innovative. Something has to change. So I look for all of those things. And once they're there, how good is their business model? Are they really dreaming? Can they really achieve this? Do they have the right characteristics? And look for investors, again, understand your investor, understand their investment thesis, make sure that they are the right investor, because your investor is not just somebody who's giving you money, but somebody who can also open doors for you, make connections, be your friend, be your advisor. Look for, especially if you're early stage, look for investors who can do all of these things for you and not just write you a check, because it's not like going and getting a loan from someone. You really need that partnership. So pick wisely when you pick your investor as well. That's what I would say. Thanks.
Could I just jump in for a minute on Artie's comment? Remember that any investment dollars you take from either an individual or entity, they will remain on your cap table likely for your entire company life cycle. And so it is truly a marriage, and it's long-term, and it's very difficult to get rid of them if you have an issue.
I want to piggyback on what both Susan and Aarti said. One is, I'm amazed that we typically go in at Series B stage. That's our sweet spot. We have invested early on. But even at that stage, I'm amazed by technical founders who talk a lot more about their technology and not necessarily about the pain point that they're solving and how customers value their solution. So that's one of the key things that I look for is it really solving a real need, and how big is this need? Because we are trying to look at, okay, is this yet another nice to have solution in the market, or is this something revolutionary that's needed, or is it filling a very critical need in the market, right? So from an acquisition standpoint, is this something that a potential acquirer may say, hey, this is something that's needed and I can't build this in-house, right? And the second point that I wanted to talk about was the relationship, right, that both Aarti and Susan alluded to, which is these are long-term relationships. I don't know how much of my earlier comment around coachability was heard, and that's what I'm looking for. Can I actually work with this founder on a longer-term basis? Because I want to be an investor that just writes a check and steps aside. I want to build a relationship with this founder. So that's what I'm looking for, and I think that's what the founder should look for as well. Is what can this investor provide me, and how can I, how can they leverage their network to bring value to me as a startup? And I think it's bi-directional. It's not a one-way relationship by any means. I think those are really important things that an investor should look at.
Thank you so much, all of you. If there is one thing that was a common thread between all your comments, it seems like you've heard one too many engineers or non-people savvy people talk to you about their products and numbers, and less about looking at their customers, the person who pays for the product as a human being and understanding them, and also looking at the person they're pitching to as a person and understanding where they're coming from. So it's focus more on the people, whether it's the one-on-one sales you're doing with the investor or the customers that you're selling to, one too many. Thank you.
Yeah. Think of it like when you're speaking or in a meeting, right? You need to think of who you're addressing and why would they be interested in what you have to offer. So you have to think about what is the investor thinking about. A customer pitch is very different from an investor pitch, right? So the investor is looking at, can I invest in these guys and make money? So at some point you need to get to that and show them why you're valuable for them and why should they be spending their time. To Susan's point, a lot of VCs get a lot of deal flow. They're trained to say no. They're trying to look for why something will not work. So your job is to tell them why yours is the best company that they should be investing in.
Yeah, and also just to add to that, you get one chance. Okay, many entrepreneurs don't realize that when they're not prepared, they say, "Should I go and talk to so and so? I met so and so." At this event, so I'm going to go pitch to them because I have their business card. No, please don't go until you're prepared, because you get one chance.
Great. We have another 10 to 15 minutes left, so I want to move on to trends. 2020 is synonymous with COVID, and that has changed many things upside down. So I want to understand how the investment landscape has been affected by the pandemic, and also what you see as new and interesting areas of innovation. If I may have Priya start this question, because she has this position of seeing globally also what's happening and among different stages. So she may have a perspective specifically in the quarters as well upcoming.
Great. No, thank you. And what I'll do, we have like a 60-page report, which is not enough time for us to go through. But what I'll do is share the link with everyone. So hopefully you can go through it. Just from high level, I mean, and starting with the good news is we're starting to get back to whatever the new normal is, right? From the deal perspective, angel, and which is, I think this group, majority of this group is very early stage. And angel deals are still very, very resilient to the COVID pandemic and continuing to follow the same trend. I would say definitely there is a lag in the mid and the late stage deals for all the right reasons, because again, the check size is much larger. You're doing due diligence on Zoom. Though investors who are here who can probably attest to it, they're getting more and more comfortable getting to meet people over the Zoom from end to end. Not just that you've met somebody 6 months ago or 8 months ago prior to them dying. Now you're looking to close the deal. Now everything is over Zoom, right? So which is much, much difficult to do. But folks at the early stage are doing much more in a resilient way than at the later stage deals. So that's one thing to start off with. From a sector perspective, what I would say is, enterprise has been the most, again, another one that's most resilient to this pandemic because, again, the burn is less. The work from home concept has been there even from before. Obviously, that's continuing, and the cash and runway that's needed for that sector is kind of continues to stay at a very low level. And obviously, the founders are finding innovative ways to keep even the margins lower, right? So I think from that perspective, as enterprise sector has continued to stay on top of the list in terms of needing lower cash, having lower cash burn to kind of have a stronger sustained growth. I know there was a panel before that. Anu was speaking about venture debt, which I might have to respectfully disagree, because we're seeing a huge trend in terms of folks taking venture debt to access capital, because again, there's a strong push from investors around to build your runway. And we're seeing about 12 to 24 months runway, though a vaccine is coming out. There's still a while for that to be distributed and things to get back to normal. So what does that mean is, the access to capital could be via debt or equity. But debt is a lot more cheaper today, given the low interest rate environment, and it is less dilutive. So we're seeing a lot of founders get access to debt as well. So obviously your access to debt depends on your stage of the company, but happy to kind of answer any questions on debt offline if anyone has questions. So I would say these are like high level trends, but I'll share the state of the markets with you guys so you can review it in more detail.
And anyone else on the panel, if you'd like to talk about how it's affected your investments, how you're investing going forward, and also if you're seeing anything new and interesting as areas of innovation.
Yeah, I can go next. So I'm just going to speak for myself personally with my investments and also for Silicon Valley Social Venture Fund. So we have actually seen a lot of deal flow, and personally, I have been able to attend a lot more networking events now than I could previously because I don't need to travel. So I've been listening to pitches that I normally would not have heard because I would have had to travel somewhere to hear them. And we have come across some pretty amazing companies and I've invested personally and invested through SV2 as well, more than we did pre-COVID, maybe because I don't know, they're just more people are able to reach us from out of, who aren't in the Silicon Valley. People are reaching us from all over the country, all over the world now, which is quite different than before. And I think people are comfortable doing that. You're not asking for a face-to-face meeting anymore. So I think that comfort level has changed. So the deal flow, again, I'm talking specifically about, technology companies, anything that's brick and mortar, I'm not much involved in, so I don't know that side of it. But if it's a SaaS platform or if it's AI or any of those, I've seen a lot more of those. I've also seen that, especially in the impact investing side, the way the methods of investment have changed. It's much more debt related. People are coming up with new ideas like revenue sharing, project-based investments, etc., that we had not done in the past. We had done, safe notes and loans and those kinds of debt notes. We've also found that on the impact investing side, people are giving, fully returnable grants or are granting money returnable at something as low as a 2 or 4% interest rate, which also helps companies get seeded and get started. So COVID has been bad for certain businesses, but it's actually been good for certain businesses, and there's a lot of innovation going on. So hopefully there's some silver lining there. Thanks.
Susan,
I'm happy to go next, and I'll give a CVC perspective as well. I think I've done post-COVID 4 investments, so we've not stopped. COVID has not stopped us from making investments. We've always invested in sort of, we are kind of geo-agnostic. We invest in US, we invest in Europe and Israel. So from that standpoint, for me as an investor, it's made it a lot easier. I used to travel to Israel once a quarter. Now I just meet a ton of companies across the world over Zoom. That said, I do miss the in-person meetings. Several of my deals were done, without meeting the founders or having any kind of in-person diligence. But what has happened is, post-investment, I've started doing some, monthly or quarterly sort of socially distanced walks with some of my founders to build that relationship. Because to my earlier point about this is not just one and done. It's a longer term relationship, and it's much easier to develop that relationship sometimes in person. So I've done that post investment in certain cases to build that trust level, to build that engagement with the companies that I'm closely working with. In terms of companies themselves, startups themselves, as Aarti mentioned, there are some companies that are seeing sort of a headwind and some companies that are seeing a tailwind because of COVID. We are seeing that a lot of companies that are more focused around remote work enablement and things like that are actually having a pretty easier process. Enterprise sales took a hit early on, but I think they're starting to come back because people are now much more comfortable with doing processes, over Zoom, including sales calls. In the beginning, that was a lot harder. So I think there are companies that are definitely, even in the automotive sector, for instance, was one of the most impacted, but they are starting to come back. They're still investing in innovative sort of areas. So I think overall, there's a good trend in terms of COVID, but as we are also seeing some big impacts with some of our startups having trouble if they are not adapted to a remote sales model.
Mm-hmm.
Thank you.
Susan, do you have anything to add?
Yes. So we have done one investment since COVID. That would be in the third quarter. We have another one going in the fourth quarter. And in both of those cases, the degrees of separation of people who knew the founders and knew us was important to us, so that they understood the way that we work, because obviously we couldn't necessarily meet them in person. And so we had to decide to pull the trigger on the kind of the filter mechanism that was there. Subsequent to that, my partner who did the investment third quarter has done walks. I think walks are great opportunities with your founders. And the one that's going in the fourth quarter here is someone that we've known for quite some time. So for new investments, the way that we're filtering them is through kind of, is there someone who knows us very well, who knows them, and can match up the work styles and the way that we operate and the way that the entrepreneur operates. That works well for us. And we'll continue to do this. And these are companies that are not necessarily in the Bay Area. One of them is, and one of them isn't.
Great. So a couple of questions from the audience. One of them is like the check sizes of the investments you make.
Sure. Our check size, so our companies, because of their capital efficiency, really only do 2 rounds. They do the Series A and Series B, and then they go profitable. And so the Series A we lead, we'll typically invest $3 to $4 million at that stage, and then the Series B oftentimes will lead as well. and we will wrap around the other investors with us. And so in a total, we'll put a total of $6 million into the life of the company, and our companies will typically raise somewhere between 12 and 15 total. And so that would be 6 from other folks that are very synergistic with us.
How about you, Aarti or Gayatri?
So for us, we've written checks anywhere from $1 million to 10, but I would say sweet spots more in the 2 to 3 range. We typically do not lead because we're looking at investments in sectors where we are not, we are more of a component company. So Micron is a memory and storage vendor, and we are investing in areas like healthcare. So we tend to follow in areas like that. So that our sweet spot, I would say, is in the lower single-digit millions.
So yeah, mine is very, very different because I'm doing early stage. So the companies that I look at are raising somewhere between $1.5 million to 3 million, in that range, right? So both through SV2 and personally, the check size is 50 to 100K is generally what I tend to do. So very different than the others. So this is seed. I don't do pre-seed, but seed.
We have, so whoever's in the audience, we have every stage covered here, including debt. Okay, since we have 5 minutes, and this was originally supposed to be on Women's Day, celebrating women, and we have all women panelists. So I do want to ask a question about, this is specifically for the people in the audience who are not entrepreneurs or who are interested in getting into VC. So I would love to hear any piece of advice, words of wisdom, what it took for you to get to where you are today. Any again, I'm going back to tactical and something that somebody can take away and implement. Whatever helped you grow, you can share that.
I can go first. I've had a very mixed background. I've done I've been in large Fortune 500 companies like Dow, Corning, and now Micron, and I've worked at really small startups. Typically in a executive kind of role, less than 50 people. So both extremes. One of the things that being on the venture side, I think my recommendation is for people to work in a startup or at least do some kind of product management or kind of role. Because when you sit on the venture side, it's good to have empathy, to understand and be taken credibly by the founders on the other side of the table. I think there was a question around, do you get interviewed by VCs? You question founders, do you get interviewed? As a CVC, we constantly do, right? Because for institutional investors, the value add is clear for the most part. It's their brand, it's their check size, and so on. But for CVC, there's always questions around, hey, are you a value-added investor? Are you strategic or not? And so on. And I think having had that experience as a startup, either employee or especially in a product management or operational role, I think brings a lot of empathy to the table. You're able to speak to them in a way that they know that they can build that relationship with you. So I would definitely urge people to, do something in that side before considering venture. That would be my one takeaway.
Thank you. That's right.
And maybe I can add on to, sorry, I cannot see you guys. Can you guys see me?
We can hear you.
Okay. I was just gonna say 3 quick things, that kind of advice that I would have is, one, be bold for, female leaders out there listening today, because we tend to, I would say not be risk averse, but not be as bold, I think we always want to be 200% before we take that next step, so I think it's okay for you to not reach that 200% before you take that next step. So that's one thing, so kind of be bold in whatever you want to do in your life as a next part for your journey. 2, I would say we all work way too hard and kind of way to expect too much high expectations on ourselves. But I say add to that, work smart as well. So I think that will kind of multiply the effect of your success. 3, I would say if you're a female leader already who's up the food chain, try to pull other women up to kind of help each other. Or if you're kind of coming up the ladder, reach out, be bold to reach out to folks who are higher up to see where they can help you mentor. So having a strong support mentor system is going to be key for us to kind of collectively go up together. Those are the 3 things I would say.
Priya's going to get a lot of LinkedIn connect right after this.
I can go next. So, first of all, don't think you're a woman. You're just like everyone else. So don't differentiate yourself. Women tend to do that. They step back. So I studied mathematics and then computer science. So I was always with men. There were very few women in engineering school, and that was fine. I never felt any different, and I don't know why, I just didn't. And through my career, I also worked for 2 Japanese companies. I've been in many, many, many large meetings being the only woman, but I never thought of myself as a woman. And I think that's why I got the respect. Had I been the one to get up and, offer a cup of coffee, I might not have got the respect I got. So just hold your stance, do what you have to do what's right. And yes, we do work too much. So I think prioritization is important. I've made that mistake and not prioritized and just have taken on and been overwhelmed. So I would say be a leader, be who you are, and just bring out the best in you. Don't step back and don't feel scared. And like somebody else said, women lift other women up. So please do that. Just pull each other along and go for walks. Yeah.
Susan.
Yep, I guess I'm last one, and I would strongly echo the words around product management. I think if you want to ultimately be in venture capital, product management, because it touches on sales, engineering, operations, customer support, you see the entire circle of a product capability in the marketplace, and therefore you are as good as being a P&L manager as there is without actually moving into that general manager role. So strong advice, get that operational expertise in the product management slot, do large companies so that you have a good foundation, and then do startup entities so you can understand the the way that startups will work. I hope you have one negative experience and one positive experience in your startup, because that negative experience will help you to build a mental model, and then your positive growth experience will fill that mental model out so that when you do your own startup, you understand the signals that you are getting in the marketplace. So those are kind of the characteristics that we look for in venture capitalists, because when they come in to work with the founders and the CEOs, the greatest thing is when your founders and CEOs want to work with you, because not just because you're writing a check, but because they truly do believe that you're going to add value. And if they come back to you multiple times to do multiple companies, well, that's the greatest honor. So I would strongly recommend operational expertise to bring to the table, and then move into the venture capital side.
Thank you, Susan. So that brings us to the close of this panel. I want to thank the panelists for sharing their nuggets of hard-earned wisdom, and for ATEA for putting together something so wonderful and bringing together people with such diverse and rich experience set. Speaking of experience, I heard this from somebody else, that experience is like a comb you get after you go bald. So our panelists today took, they've very generously shared your combs with you. So I hope you, the audience, is able to use it before you go bald, metaphorically speaking, of course. So thank you again, panelists, and thank you for being a wonderful audience and asking some very insightful questions. Thanks, everyone.
Thank you.
Thank you.
Bye.
Well, thank you all. These powerful women, they transported us to a very, new world of the VCs. Great conversation. What do you think, Priya?
The scenes.
Priya, you're muted. Okay.
Yeah, you don't really get to see behind the scenes much. So this was really good that we actually, got to sort of draw the curtain and look behind and see what they used to base their decisions, what are their interests. There were a lot of really good points in there, stuff to, mull over and internalize, so to speak, right?
The seat at the table. Am I muted? No. So can you hear me? Okay. So these days we are talking about taking, trying to fight for a seat at the table, and these powerful women are creating those like tables themselves. And we talk about the breaking the ceiling, glass ceiling, and each and every one of them are like, breaking it. So beware, all the ladies. Wear your shoes and put on your makeup and lipstick, and then there's shattered glasses everywhere. So with that said, we have our last but not the least closing amazing keynote address, which is in the form of fireside chat with Erica Kramer and Preeti Padman. Preeti, I would like to make an introduction to Preeti. Preeti